BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top trade. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi.
Hello everybody, welcome back. You've made it past the thumbnail. Now it's time for the analysis. That's right. So I think just before I start, this is something that's I'm sure is going to trigger a lot of people, because obviously I'm talking generally downside, more downside, and downside. As I've been saying since for ages, basically. Since for ages. I'm saying I think a consolidation's coming. We're seeing a consolidation. We're still in a consolidation. So consolidation is the name of the game. But, if I don't think about other things, and if I don't use technicals to counter the overall trend, I might miss out on something. All right? I might miss out on something. It doesn't mean that it's going to happen. I think this is part of the thing that upsets a lot of people on this channel, is that really what I'm trying to show you isn't that something is definitely going to happen, it's that something could happen, right? It could keep going down, it could bounce back up, it could do this. The only thing it's not going to do is go to the left. So I'm going to present to you the case for an alt season soon, right? Doesn't mean that it's going to happen, but if I didn't tell you about it and then it happened, and people would wondering, well, hang on a minute, where did that come from? I say, well, there was a chance that it could happen, and this is the setup that could bring it. Doesn't mean that it's going to, all right? I'm going to show it to you. This is what trading is. You don't just go, it's going to go down forever, and then trade upon that. You say, well, it's going to go down. I don't really know where to, but it's going to keep going down. But something might happen along the lines, and I'm going to show it to you now what might happen. And again, the operative word being might. So this is the total 2, all right? Total 2, just like any chart, really. If you're above the 20 weekly or 21 exponential on the weekly, you're more likely to remain above that area. And we can see that we've tested these areas. There's your 20, there's your 21, a bit of a dip down below both there, but each candle body closing above it. And again, if we come down to that level again, educated guess would say that we should stay above it, although it might not happen. And this is where you'd want to stay above if you want to have immediate continuation. And at the moment we are above it, so we have to accept that, okay, we're above it, so the chances of us staying above it are more likely than going below it. And that's only 65%. That's a standard Bollinger Band strategy, 65%. So you're 65% more likely to remain above the band if you're above it, as you are below the band if you're below it. So that's support while above it, decent support. While below it, that's resistance, decent resistance. So at the moment, the odds are in favour that we stay above it. And again, we've seen that in the last month. It's not just the picture that we're painting here on the weekly. There's also something on the daily as well that's worth talking about, which is obviously once you have a golden cross like this, you look for a retest of that. And this is probably a little bit more likely as well than the Bollinger Band strategy. I don't know the exact odds. I know the odds on the Bollinger Band is so well established, but this is something that is anecdotal, but it happens more often than not. I would probably say I'd put it down to the point of roughly around 70% likelihood of this working out, because it does most of the time, all right? And we play these all the time. That's also how we've managed to get the downtrend confirmed recently, because the 4-hourly has done death crosses, and with death crosses you get death cross retests. You've had it on Bitcoin, you've had it on Ethereum, all on the 4-hourly, because that's where the death crosses are. So look, there's your death cross, boosh. There's another death cross, boosh. Death crosses across the board. Same thing on Ethereum. There's your death cross, bush, another bush, and another bush, all after the death crosses. So death crosses all over the place and continuation down. It's the best place to go short. It's also the best place to consider reversal once it's been broken and retested and gone up. So what we're seeing here is the inverse of that. This is a golden cross on the daily, so quite a strong trend. And the support of that coming down just below, currently just below this horizontal area of significance. It is significant as well, by the way. We've got these areas over here. We've also got this, which is the last breakout portion. And that's coming out at around about 916 billion, which would be a further drop on the total 2 of about 9% over the next few weeks or so. It will be less and less because it is uptrending. So is the simple. They're both uptrending. So long as we're above them, they're going to continue to go up, and they will stay going up, which is good. This is all bullish. for a bullish setup. So you'd be looking for a pullback into that, and like I say, most of the time you get a V-shaped recovery and then continuation. Most of the time. So we do have that on the total 2. You'll have it on the total 3. You'll also have it on the total. So crypto generally pointing to potential reversal from these areas, which again does require further downside, whether you look at it on the weekly or on the daily, but that's where we might be looking at the reversal. Which again, this is the total 2, so it includes all altcoins. It's not going to be as volatile as an individual altcoin. And with that, so we've measured a potential 9% pullback. Some altcoins have got a further 20% to go. Some have probably got 40%. Some might just go down and never come back to life. And I'm going to show you something else. So we've established that basically on the total, on the weekly and on the daily. So let's have a look at Ethereum then on the daily. So Ethereum on the daily is approaching quite quickly its 200 exponential and simple golden cross retest on the daily. The first gives us an area of 4%, second gives us an area of 7.5%, and that's where you'll be looking for a V-shaped recovery and then some. Again, it's not 100% success rate, it's about 70%, so the odds are still in your favour, but 70%, if I was lying in bed and a doctor came to me and says, look, you've got 70% chance of survival, I'd be like, oh, I suppose it's better than 50, but it's not great. It's not great. And so you'd be thinking like that, wouldn't you? Just as you would be thinking that this might not hold. Even though the chances are that it will and springboard and go up, it might not. There's reasons that it wouldn't as well. So first reason is that if we close the weekly on Ethereum like this, we have closed below a major area. This is supposed to hold, remember? This is supposed to hold. And if it doesn't hold, then there is a bit of a free fall here on the weekly if you're judging it by the weekly. We haven't closed this weekly yet, by the way. We've got couple of days yet, about 48 hours, well, about 36 hours for it to close, and so we don't know what it's going to look like. But if it does close like this, it probably would mean further downside on this one, to the tune of about 2,500, 2,004. Further downside is basically what we're talking about. Despite these looking like realistic areas for not just support but potential reversal, the weekly is offering a different story. So you're like, okay, so we've got two opposing views here from the same analysis. What am I supposed to make of that? Well, you make of it what you make of it. To be fair, this is always going to be the issue when making trades. You're looking long term, you're looking medium term, you're looking short term. What are you looking at? The daily is in the middle of all of that. It's a decent time frame that offers a very decent setup here that's probably worth trying to take advantage of, and it won't take long to know if you're wrong. So if you're thinking about getting back into altcoins, I wouldn't go all in at this level, but as far as the dollar cost average is concerned, that's your first spot. This is basically what I was talking about on the Patreon last night. I said, right, if we're thinking going into any kind of altcoin, or any trade of any form, not just altcoins, but anything, before you enter into a trade, you've got to go and dig deep in the back of your head and say, what's the risk to reward? Now, from December onwards, I was saying the risk to reward isn't great for altcoins because we've gone up significantly. We'd already seen a few 100%, by December. We'd done well. In fact, we'd made tons of money and we didn't want to lose it. And so I kept on saying, don't get used to high prices. You can make small trades, buy the dip, sell the rip type trades, but to assume much higher for much longer would be kind of crazy because we're likely to see a consolidation, blah blah blah. And so we're getting that. So now what I'm saying is, if we're going to start entering into altcoins, we could put in 10% here for a dollar cost average because the risk to reward is better than it was over here, for instance. Much better, in fact. Let's assume that the Ethereum goes back up to its all-time high, which is just up here, and we bought the first dip, which was, we'll call it the 200 exponential, although I think the simple is probably more likely. So I'll tell you what, we'll measure it from the simple, which is this 200 simple, this orange, the yellow one here. So we came down to there and we bounced, okay, so back up to the previous all-time high, and again, this is a trade that could last a year and a half, so it's 76% gain back up to the all-time high from there, okay? And what's the risk? Well, the risk would be that loses it and we come down to the next major level of support, which is down all the way down to this level here, about 2,200. Alright, so you're looking to risk a 19% pullback, continuation pullback, to the next major level of support. Okay, so the risk to reward is actually good. So there's your reward, potential 76%, and maybe more. There's your risk, okay, 19%. If that gets lost, then you come down even further to the next level of support, which is around about 1800. So that's a further 30, almost 31%. Still, the risk and the reward is good, you would say, because you're doubling the reward opposed to the risk here. And again, we're talking spot trading here. So what will happen is if you lose this support, you come down to this one, you lose this one, you come down to this one, the reversal could take place from a much lower area. So what you do is you buy a bit here. 10% maybe, 20% if you were looking to go into it is all you would use at the most. And if it works, excellent. And if we have a trend reversal, even better. You can play the trend. You can play the trend, buying those dips in the appropriate places for instant gratification of your buys. If it falls, no big deal. You've got plenty of capital to put back in at a low area and plenty of capital put in at a low area as well. You're dollar cost averaging into major supports. Each one of these could be the area of reversal, and also none of them could be. Okay, none of them could be. So you've got to think about it like that. However, just using Ethereum as an example, expecting, let's just say your expectations are that this probably won't hold, but we'll try it anyway. The risk, the reward outweighs the risk by double. So it's actually okay. Now you've always got to apply that to everything that you buy, any altcoin, any chart, any stock, anything. You've got to make sure that the reward is better than the risk. Otherwise it's a gamble and you think, well, what's the point of me doing this? What is the point? So you're looking to make more back than you are to lose, even in a temporary continuation of the pullback. And I don't think this pullback will, if it does continue, I don't think it will go on much longer than this summer. And that was always the expectation, that we'll pull back throughout the summer and at some point turn around towards the end of the summer, and then we'll start going up again, or at least accumulate for the rest of the year and then go up next year. So the time to buy will be throughout the summer towards the end of this year. That would be the time to buy, to allocate major positions. That's how I've seen it. That's how I still see it. And if you really, really wanted to, you could base your first entry point upon this area, because it is a golden cross retest, which does often, more often than not, give you a V-shaped recovery and then some. So there is a setup there. This is just Ethereum in the total too. Unfortunately, not all altcoins look like that. This is XRP. Unfortunately, Death Cross, retested, bang, all the way down. Death Cross, retested, bang, all the way down. So actually, we don't have any golden crosses to support us on Ethereum, on XRP's daily, nor does something like Atom, Death Cross, okay, unfortunate. So you'd be looking for the same move up and down. Chainlink, same. We're about to get a death cross on exponentials. We've already got them on simples, so you'll be looking for a move up and down. So we don't have that across the board for all other altcoins. Other altcoins have different supports that you could base on, like horizontals, perhaps fibs, all kinds of reasons where you could buy for something like Chainlink, but it's not a golden cross retest. Unfortunately, it's different. And so if we still keep going down for Bitcoin and Ethereum, the total two, then we'll keep going down for altcoins, and it's these ones that will see much lower, which is, again, is still good, because we want them lower so we can buy them lower so we can make more money later. That has been the message I've been trying to put across for ages. So dollar cost averaging is usually one of the best ways to go about doing all of this, because it means that you're spending time in the market, you're mitigating risk by getting in at incremental levels on the way down, not trying to guess the absolute low, which is usually pretty hard, if not near impossible. So that's what I'm thinking. I'm thinking, yes, there is a potential alt season, because although some of these altcoins, a lot of them have broken their formations, Ethereum hasn't and the total 2 hasn't. They still haven't broken their uptrend formations. So do we take it seriously? That's the question. Well, we can take it a little bit seriously and allocate maybe 10% in at these areas, just in case it does work out. The reasons it might not work out, though, isn't because of its own setup. If this is an isolated chart, for instance, completely void of all other charts, you'd probably give it more, that setup more weight. But it's not like that, unfortunately. Now, the S&P is bullish, to be honest with you. It is bullish, but we are reaching what I would consider a potential area for or major reversal, front running that high, getting a pullback so far on the top of the Bollinger Band. Now, because it's a bullish chart, each one of these areas on the bottom can be support all the way down. So it doesn't look as of right now like we're going to break down on this. Actually, it doesn't look like we're going to do that at all. But if it were to do that, it'd be doing it from quite a high area. And if it did start to consolidate, because it hasn't really, if it does start to consolidate, then it will bring crypto down way more than it should do, because crypto has been consolidating deeper and harder and longer than the S&P, and as a result of that, it will bring crypto and Bitcoin and all his best friends down much lower than they ought to go, which means that we could highlight areas on Bitcoin such as the mid 50s at least, where we've got 21 and 20 moving average on the weekly, around 57, 56. You lose that area, a nice big round number sitting about 50, well, that's 50,000, isn't it really? There's also plenty of other areas on the way down. 200 simple and exponential, 53. There you go, another one sitting down here at 50,500. So there's plenty of support below us, but it's way below us. It is way below us, and so when we can't trade any of these charts isolated. You can't look at Ethereum without looking at Bitcoin, and you can't look at Bitcoin really without looking at stocks. You can't look at stocks without looking at the Forex charts, and you can't really look at Forex charts without thinking about the implications of oil prices. And then before you know it, you're looking at lots and lots of charts just to make a trade on an altcoin, because the trading environment currently isn't straight up. It's actually down, and so it makes it much harder to look at anything objectively. Or subjectively, sorry. So I think as much as there is a chance of an alt season, which there is from here, boosh, there is a chance of that, and it would be silly for me to have not presented it to you. As much as there is that chance, it might not happen, which is why you won't go all in, or I won't go all in here. My plan, just so you know, and you'll see it next week, my plan will be to pick up some Ethereum as we go down here, maybe a couple of Ethereums or something like that. Not much, just 2 or 3, and then I'm going to start bot trading with them. Altcoin to altcoin pairs, so Ethereum pairs. I'm going to set up 2 or 3 Ethereum bots, and they're going to start generating bot profit for me, over the summer. Whether we go up or down, it doesn't matter, because my expectation is a reversal either here, or here, and if that's the case, I can have bots generating Ethereum for me while that's happening. Don't worry about the dollar amount. Don't worry about that so much. Just think about the bot profit, which will be getting generated, obviously, because it's altcoin to altcoin pairs. That is a video for another day. So I just wanted to put that to you. So no altcoin is created equal, as we know. We've seen plenty here, top cap coins that are not in the same situation as Ethereum. Ethereum is the only one really that we're looking for a potential reversal from here. It also matches the total too. However, stocks and Bitcoin could easily bring them down further, which is why we're not going to go crazy at that level. Despite it being a setup, that one of those setups that you really do sort of hope to see, and you do wait for them, because these are bullish retests. You're about as bullish as you can get, really. You're buying in as low as possible on a bullish chart. That's the point of this support. It's the lowest you can go before it breaks down. And so if you're going to continue with the uptrend, which this is an uptrend, let's face it, this is an uptrend. If you're going to continue with the uptrend, it's going to happen here. And if it doesn't happen here, then yeah, it does break down at that point. And fair play, so be it. So it's up to you if it's worth a shot. I believe it to be worth a shot. I'm going to take advantage of it, but I am not going to harvest my kidneys for it, and I will not put in my house on the market for it. I'll be putting 10, maybe 20%, probably, to be honest, even less. If I'm only buying like 2 or 3 Ethereum, it's really nothing at all. It's just literally a fraction of a percent, but it's I wanted to bring it to your attention. So I'm looking forward to these comments. They are gonna, because I imagine most people will not have watched this video. Let me know in the comments if you have watched the video. Most people will judge it by the thumbnail, and they'll be vomiting into their Weetabix this morning. Oh my God, Altseason, what's he talking about? He said down only. He said down throughout the summer. That's right. I still say down throughout the summer, but it would be silly for me to not tell you about this, even as it's, literally
this is a setup that is worth talking about. It doesn't mean that it's the only setup in the world. It doesn't mean that it's guaranteed. It just is a setup. And that's what a trader does. Presents setups and decides whether or not they're worthy of taking. And the risk to reward on the long term is fine. So if it goes wrong and it's a spot trade, it shouldn't really matter. Because you either get burned, but later on down the line make 73%, not bad. You either make a further 120%, which again is not bad, or you come down to the lower support and you make 158%, which is not bad. So each one of those supports does offer decent returns over the next year or two. And I know they're not crypto gains. That's not what you really want. I wouldn't get out of bed for anything less than 1,000,000,000%. That's your problem, not my problem. I look at this and go, well, actually, when you stand back and reflect on what I've just said there, the end result is profit generally across the board. So that is the end result. The only problem you're going to have is time, and this is a thing I think that everybody struggles with, at least that I come across. Time. The concept of time is a big problem for a lot of people. They want money right now, immediately, don't want to wait. I can't sustain any downside. I have to buy the absolute bottom and I have to sell the absolute top, which is, to be fair with you, that kind of mindset is going to destroy you. All right? You can't live like that and trade. It's impossible. It's not going to work out well for you. If you think about it like this, you go, well, hang on a minute. That sounds pretty good, to be honest with you. I've got double the reward, half the profit, half the risk, sorry. So it's all talking about profit regardless of where I buy it from. And dollar cost averaging into these areas seems a reasonable thing to do. We are not naive. We can see that we're still in a downtrend. We can assume that the downtrend will continue. We're not expecting this to be the low. However, there's enough chance for it to be a low for us to at least put a little bit in there, just in case. Just in case. Anyway, I'll leave it with you there. Like I say, if you made it towards the end, if you made it to the end of this video, congratulations. Please let me know. If you made it to the thumbnail, I'll know, because all I'll get is complaints about how I've said something counter to what I've previously said, despite reiterating what I always say in this video throughout. Right, I'll leave it with you there. Thanks for watching anyway, guys. Take it easy.